Nigerian shares. But before we even go any further, let's just even try and look at the basics, like the proper basics of the Nigerian stock market. So the Nigerian stock market is actually called the NGX, so the Nigerian Exchange Group. And the reason why it's called the Exchange Group is because that's where the brokers exchange, right? Literally. So the brokers, that's where they do their brokeraging at the Nigerian Exchange Group. So they're all registered there. And there is a regulatory compliance, right? So it's not like the brokers are not regulated. The brokers are regulated by the Securities Exchange. So you don't have to be bothered about what happens with your brokers. They'll be fine. They're all regulated by SEC. And also your shares are not held by your brokers. They're held by another um agency called the CSCS, but I don't want to make this too complicated. Just know that everything to ensure that your investment in Nigerian shares is done for you. You don't have the possibility of losing your shares, but you might have the possibility of losing the price. But we'll come to that. Okay, so here are some brokers. Meristem, these are some popular ones. There's Bamboo, there's Afrivest, there's Coronation, there's Truth. There are a whole lot more, but these are the ones I am familiar with. I use Afrivest. Afrivest is an app, it's a mobile app, very straightforward. Coronation is connected to Access Bank. If you have an Access Bank app, even better, you can start even trading and investing in shares even as soon as today. Okay, so we cannot talk about the profit potential without talking about the risks involved. So the same way I talked about Owando shares, we're coming to it, but you have to understand that getting involved in Nigerian shares is not a no risk situation. You can have prices. I've just talked about prices going up. So what about prices going down? And anything can cause prices to go down. Don't forget that you are dealing with human beings and there's something called sentiments. So market sentiment, something can happen in the market and the prices go down and the prices go up. So I'll give you an example. So I remember when the CEO of Access Bank, he died in a helicopter crash. At the time, Access Bank was selling at 24 naira. As soon as he died, everybody felt like nothing good was going to come out of Access Bank, and they all sold their shares, and the share dropped automatically to 16 naira per share. Can you imagine? So he lost, anybody that bought 24 naira lost almost a 30% value. So these things happen. In the same vein, just as we're talking about Owando, right? People that bought Owando at 5 naira or 13 naira rolled it all the way up to 91 naira per share or maybe a little higher. Some investors that bought at 91 naira found their investment at 38 naira. That is more than a 50% loss. And so you have to understand that the Nigerian stock market can happen to you. You are at the risk of losing money. If you put money in at the wrong time, for the people that bought say around here at 90, at between 80 and 90, you lost over 50% of your money at this price. It's now at 38 naira. But that's not the current price of Owando as of today. I think it's a little under 50 naira per share. But at the time I did this presentation, it was like 38 naira per share. So these are the things that can happen to you in the Nigerian stock market. You can either lose or you can either win. You can either make profits or you can actually make losses. So you have to have that in mind anytime that you are buying. So buying Nigerian shares, I recommended already Afrivest, that's one of the ones that I use, and I'll just take you through very quickly how to buy shares with them. It's pretty very, very, very simple. You just literally need to download the app. The app is called Afri Investor 2.0. And then once you download the app, you need to fill in these details. And so you need to fill in your email, your phone number, your date of birth, the password. Then you need to give it a PIN. Then you need to choose the type of account you want. You can start with a POP, it's fine. The lower the account you start with, the lower the requirements. So I think for this one you just need your BVN and maybe to submit one ID card, right? So these are the steps. You need the BVN, you need your personal information, you need the next of kin, and then your KYC document, which is your ID card. And as soon as you fill all these things, very quickly you have access to the Nigerian stock market. I just wanted to make sure I threw that in there. Now, this is the crux of the matter. I mentioned profiting and I mentioned also loss. The only reason, the only time, the only way that you can save yourself from losses is for you to have a plan in the Nigerian stock market. So we're talking about, so right now we're going to even move straight into investing, right? So what's your investment plan? And we're going to talk about three things in relation to your investment plan. All right, so the very first thing you want to be looking at is duration. As an investor must always have a long-term mindset. Bought shares should be given a duration of 3 to 6 months and above to yield profits. So once you buy your shares, you are not expecting that after 2 weeks you start wondering, why is this share not going up? No, that's not how it works. Yeah, that means you have a short-term mindset. You want to have long-term in mind. You want to, if you notice, if you follow me on TradingView, I mentioned quarterly picks. So I give my investments like three months to actually yield. So you want to think long term when you are an investor in Nigerian stock market. Then you want to have an entry and exit reason. Why did you buy the share? I was talking about MTN the other time. It's not a good reason to buy a share because a friend asked you to buy. You have to have a reason why you entered the market. Maybe you found out something very fundamental. So for instance, for Owando, people found out that the government of the day in Nigeria, they are involved in Owando, and so that's one of the reasons why the prices went up. So if you had that pre-knowledge, then you would enter into Owando knowing that it was going to do well. So that was an entry reason. And the exit reason could just be that, it's ridiculous. I mean, if your share goes from 5 naira to 90 naira, it's ridiculous, right? So you could just sell because the prices are now ridiculous, right? So, but you must have an entry and exit reason. Then you must also have a profit and loss strategy. So what happens when you're making profits, right? So it's almost like the exit reason. If you're making profit, what happens? Do you stay in profits or do you take out profits? And what if you're making losses? Do you buy more or do you completely sell everything? So you have to make up those decisions for yourself, especially when you are investing in shares. And it's very important for you to answer some of these questions. They're very important because sometimes your investment is a reflection of who you are, right? So you need to, if you're a disciplined person, you know that you're going to buy at certain prices and sell at certain prices. If you are not disciplined, if you're not self-aware, then it will be a difficult task for you to even know why you're buying or when you're even going to sell. So profit planning. To achieve a specific profit target, an investor must implement a series of deliberate actions. Answering the following questions is crucial to the process. So you have to have self-awareness. Why am I buying the stock? How much am I risking? What is my investment goal in terms of capital appreciation? What is my risk tolerance? So I mentioned the Owando. What if you bought a Owando at 90 and it started dropping to 38? Will you be able to take it, or will you just sell and say, oh, I've lost money, that's it? Or would you say, oh, very good opportunity, let me keep buying lower? What are your thoughts? What would you do? What's your risk? And then if you saw it at 90, where was it coming from? Why is it now at 90? Is that a best time to buy? And then what's your investment goal? You've bought at 90. Where do you expect it to go to? So you have to have that awareness. And then also stock analysis. You want to be diverse. Even if you're just starting out, you want to make sure that your portfolio, and then your portfolio just means that a bunch of stocks that you have. So you want to make sure that they are from different sectors. Maybe you buy from the banking sector, you buy from the insurance, and recently the insurance sector had a major boom. You want to buy from the food, and you want to buy from commodities, or you just want to, or industries. You just want to make sure that you have a very well-rounded portfolio, so that when banking shares start to do well, you have some banking shares. And so when insurance stocks start to do well, you have some insurance stocks. Or when agro-allied start to do well, that's any agricultural produce stock starts to do well, then you're also there. Or when industries, Boa Cement, or all those other industries start to do well, you are also there. So you want to make sure that your portfolio is as diverse as possible. And at the same time, you want to make sure that when you're buying stocks, undervalued, overvalued, you want to make sure it is undervalued. You want to make sure that it's not the normal price. So I'm going back to the example of Owando. Everybody saw Owando at almost 100 naira. So at the point of 38 naira, that's when people should buy, because at that point it has become devalued. Nobody wants it at 38 naira, but that's the best time to buy. And then also you have to do your fundamental analysis. You have to check on the company. A company like Owando, I mean, it's already a multinational, and so it's going to do well. And then there's some people that are interested in stocks, the dividends of a stock. You can also look whether your stock is yielding any dividends. Okay, so that's a whole lot to handle, but I hope you are catching on. I hope you are following through. I want you to, for technical, for the people, that's part of the entry reason for me when I'm trading or when I'm investing. I use technical reasons, and if you follow me on TradingView or Twitter or any of these platforms, you will know that basically I use technical analysis for my entry reasons. So, and if you're a fundamental person, you also want to look at Yocha, right? This is a very good app to download. There are a lot of Nigerian stockbrokers and a lot of Nigerian investors on this app. Also Nairametrics, a lot of Nigerian investors also here. And for technicals, you want to stay with TradingView. Okay, so let's come back to MTN. So I bought here 169. I sold here 286. I waited. Now this was around June 2023. I waited. And as soon as I saw MTN back at 170, I threw everything I had into the market. I just used this value, but I literally threw money into the market, because guess what? It's like I got this opportunity back at 169. I was like, 170 was perfect. I bought it back here and I gave myself, so I had an entry reason. Do you see that? Entry reason. It wasn't like how I bought the first time because a friend asked me to buy over here. And it wasn't because I needed money and now sold over here. I didn't have good entry or exit reasons. But now, as a more intelligent investor, I had an entry reason. So my entry reason was to buy at 170 over here. See, I had a buy zone. So what about my sell zone? My sell zone was going to be around 300. And guess what? MTN right now is at 435. But did I sell? Yes. I knew my entry and exit reasons, and I stayed true to my entry and also stayed true to my exits. That's how to behave as an investor. And that's why I came back to this, because you have to have an entry reason. Why did you enter? I bought MTN because I knew it was like a monopoly in our markets, right? It's one of the best telecoms networks in Nigeria. There's none to compare. And so even though the shares were not doing well, eventually it was going to catch up, and it did. So it went back to 170. I bought, and then I have sold at over 300. Okay, dokes. So it's also important to look at risk management. If you follow me on TradingView, you know that I always talk about low risk, medium risk, high risk. So we'll just quickly talk about determining the low or high risk or medium risk of any stock. Then we'll also, before we come there, let's also talk about to not put all your money in one industry. I think we've already mentioned that you need to diversify, because that diversification is your risk management. So put money in bank shares. You can decide to put in agriculture, telecoms, industry, oil and gas, fintechs. You just share it all around. That way you're diversified, so that if anything happens to the whole of the banking stocks, you're not completely in harm's way, or anything happens to all the oil and gas, your portfolio is not all in oil and gas, and so you'll not completely be wounded. Okay, and then you want to stay updated. I mentioned Yocha, I mentioned Nairametrics. You want to stay updated because it's part of your risk management. You want to know what's going on in the markets, so you have to stay updated with economic and political views. And you also want to dollar cost averaging. And so pretty much what that means is if you had planned to buy maybe, let's just use an example. Maybe you had, let's just use the same Owando example, and you wanted to buy 10 million worth of Owando. You can say, instead of buying the 10 million worth in 1 month, you can decide that I'll buy Owando every month for 10 months. So you still bought at 10 million, but you bought at different prices. So the prices would have come all the way down at some points, and sometimes would have gone all the way up at some points, and sometimes it would have come all the way down at some points. But the point is that by the time they do your average of your buying, you probably bought at a very good price, and you'll be able to now sell at also a very good price. So these are ways to manage your risk. These are ways to manage your risk. And so we'll still go back to the low risk, medium risk, and high risk, and how you look at that technically. Okay, so to do that, let's just finish. Okay, so I'm just going to state this: sticking to your investment plan is crucial for achieving long-term financial goals and navigating the market's fluctuations effectively. An investment plan serves as a roadmap outlining your financial goals, risk tolerance, and investment strategy. It helps you to make informed decisions, reducing the temptation to react impulsively to short-term market movements. So let's not forget that I haven't done the high risk and medium risk, low risk. It's the last thing we're going to do, just so you can have an idea technically what that looks like. But we want to just end this right here by quoting Warren Buffett and saying that the stock market is a device to transfer money from an impatient person to a very patient person. Okay, so having said that, we'll move to what it is we are talking about, which is the high risk, low risk. So I'm going to use a stock like Aradel. We're just going to use Aradel as an example, right? So we'll stay on the daily time frame. Okay, well, let's use MTN. No, let's use Bois Cement. Okay, so this is Bois Cement. We'll look at it on the weekly. So as an investor, it's important that you look at things from the weekly time frame. So why I wanted to use something like this was because it has more information. All right, so imagine if this is the price action of this stock when I wanted to buy it around 49. I need to look left. Where is it coming from? It's coming from this height. The height is 85, right? If at 85 it came all the way down to 49, I'm buying at low risk because this was 84, and then it's like almost 50% off. So if I came and met the stock here at 180, where is it coming from? It's coming from here, 49. That's over 2 times the price. This becomes high risk. So from here to here, it's high risk at this point. Anything in the middle, which was around here, is medium risk. So guess what happens? So fine, I may have found it here. I'll take a note. I'll say, okay, I'm going to buy it when it comes down again. And that's what happened. It came down again over here, right? And so at this point, the distance from here to here, it has come back down here. Right at this point, it becomes medium risk. And so I'm willing to buy it here as opposed to buy it here. And that's how technically you look at your investment. So what if I found Bois Cement over here? Where is it coming from? Look at what the price was, 83%, and currently is almost 100% up. So it's high risk at this point. So that's just how you need to look at where the stock is coming from. If you know where it's coming from, then you can determine whether the price is really high or the price is really low. So I'm just going to end with that. I hope this was useful for you, and I'll see you in my next video. If it was useful for you, then follow me on Twitter, TradingView, YouTube, buy whatever purchases that you have. I have an indicator that I'm selling. You can support my channel with that, and you can join the one-on-one also platform where you speak to me on a one-on-one basis. All right, so I'll see you in my next video. This was a pretty long one, and I hope it was helpful to you. Let me know. Cheers.